Welcome to Beyond the Donation, everyone. As you can tell, I am not Matt Bitsagai. I am Val, filling in for him today, but so pleased to have with me my guest, Ken, here, who I am going to have introduce himself. How are you, Ken?
I'm doing great. Thanks for asking.
Wonderful. Ken Cerini is a managing partner of accounting and of the accounting firm Cerini and Associates. So, Ken,
Yeah,
why don't you tell us a little bit about that and yourself?
sure. We are what's called a regional accounting firm. We have about 80 people working here. We're in the New York metropolitan area. That's principally where we provide services, though we do have clients all over the country and some actually outside of the country. We predominantly, while we do everything, we're a full service accounting firm. A big chunk of the work we do is with nonprofit organizations. We work with approximately 300 nonprofit organizations. It's about 2/3 of what we do as a firm. It's almost 100% of what I do. I spend a whole lot of time kind of focusing on the nonprofit sector and working with nonprofit organizations.
That's incredible. So I noticed in the bio that was sent, it says that your firm prides itself on having high level of creativity and imagination. So can you unpack that? What does that mean in the nonprofit
Isn't that
world?
what accounts? Or isn't that called creative accounting? But no, what we do, I think the kind of the correct response there is that we take a very holistic approach to how we work with our clients. So you think of accountants, you think of finance, you think of fiscal, right, and you think historians, right? They're dealing with back
Hmm.
information. We try to kind of break that mold a bit. So by taking that holistic approach, we're not just really looking at the fiscal side of things. We're looking at operations. We want to try to help our clients be better. Because think about it, if we can help our clients be more effective and we can help our clients bring on extra funding through whatever means, whether it's helping them save money or giving them ideas in terms of new programs or working with them with their funders to get additional funding streams in or whatever it happens to be. If we can do that, more people get food, more people have housing, more dogs get to live. I'm not really a big cat fan, but more dogs get to live. So you've got all of this, that stuff that goes on. So we want to be forward thinking. We want to not
Hmm.
just look at things from a historical perspective, but we want to also look at things on a forward thinking perspective. We want to add value to every relationship. So I think that's kind of what makes us different, makes us a little bit more unique, makes us a little more creative, because we're not going to view things the same way everybody else does. We're going to look at them through a different lens and a different perspective.
That's a great answer and a wonderful segue into this next question I have for you because nonprofits are kind of different in the business realm. What sort of things can you break down the nonprofit taxes maybe and things that nonprofits should be aware of when it comes to taxes?
So we're going to kind of take a step back a second. So a lot of people have a misnomer because of the name nonprofit, right? So a lot of people think, oh, I'm a nonprofit organization. As a nonprofit organization, we have to have break-even budgets. We can't make profitability. A nonprofit organization is a business, just like any other business, as you said. A nonprofit organization is not owned by anybody. It's basically run by a board of directors, and the purpose of the whole aspect of the nonprofit organization. And a nonprofit organizations, there are a lot of nonprofit organizations who may have to pay tax or who
Mm.
don't get all the tax breaks. So what we're
Mm.
going to talk about is one segment of the nonprofit law, and it's through the IRS. It's called a 501c3 organization, which is a tax exempt organization. So a lot of people kind of mix up and think nonprofit automatically is tax exempt. That's not necessarily the case. There are other sections of the tax code, C4, C6, C7, that are not do not enjoy all of the same benefits that a C3 organization does. So a C3 is your typical charitable organization, right? That's the food pantries, the churches, all of those that do great work for the community, make a big difference in the lives of people, animals, the environment, planet, all that stuff. And they, because of the benefit they provide to the community, the IRS said, you provide more benefit to the community than the taxes that we would get from you. So we're going to allow you to be a tax exempt organization and not charge you taxes. And when we talk about not charge you taxes, there's a bunch of different taxes that come into play both, well, not both, but from a federal, state, and local perspective. From a federal perspective, it's obviously, and state and local, there's no income tax. Right? That's one of the biggest benefits. You can make money, you don't have to pay income tax. Another great benefit of a 501c3 organization, if you make a donation to a 501c3 organization, that's a charitable contribution. And if you itemize deductions or whatever, you get a tax deduction for that. So they're able to provide that benefit. When you have a company or you have a business, you have unemployment insurance, right? You have federal and state unemployment insurance. 501c3 organizations are not subject to federal unemployment tax. So you get to save on that federal unemployment tax. And a 501c3 organization can choose to be self-insured for state unemployment here in New York State. So you can, in New York State, you can opt to be self-insured so that you don't have to pay into the unemployment system. But if somebody collects unemployment, you have to foot the bill for their unemployment bill, which is fine if you have like a couple people who work for the organization who you know are never going to leave.
Yeah.
Sales tax, there are sales tax that you don't pay as a nonprofit organization. So that's a plus because you got that whole sales tax you don't have to pay. There are certain fuel taxes that don't have to be paid. So there's a bunch of different local, state taxes that nonprofits are exempt from. Let me rephrase. And I just fell into the same trap I just said, that 501c3 organizations are exempt from.
And so, speaking directly about the 501c3s, is there anything that they can do? What would they do that would jeopardize that tax exempt status?
Not act like 501c3 organizations. So if you have organizations that kind of step outside of what they're allowed to do, they run into trouble. Okay, so we've seen organizations where they've kind of stepped outside of the realm of what their exempt purpose is. And if you devote too much energy and attention to things that are outside of your exempt purpose, you can lose your exempt status. We had, I think it was a Knights of Columbus that was a C3 organization, and they started using their facility as a catering hall and a bar and things like that, where it wasn't just for the Knights of Columbus. They were bringing outsiders. They were renting the facility out for parties and everything else. And the energy and effort that was going into the amount of time that they spent doing those activities versus their exempt purpose was too much for the non-exempt stuff, and they lost their exempt status. So nonprofit organizations can lose their exempt status if they're not careful. In addition, if you provide services that aren't in line with your exempt purpose, they could be subject to taxation, but they wouldn't jeopardize your exempt status. So let me give you for instance. I have a historical society. So let's say there's an organization, the Long Island Historical Society, making one up, right? And the historical society is selling off antiques and stuff on a regular basis, which have nothing to do with the historical society. So they're not. I mean, if part of that selling off those antiques, they were putting in like this was a Long Island based antique, and here's the significance of Long Island, maybe you can get around it. But let's say they're just standard antiques, and that's outside of their exempt purpose. They could be subject to taxation on the sale of those antiques, but it wouldn't jeopardize their exempt status if they weren't spending a significant amount of their time doing it. I know it gets a little technical, and I'm sorry for that. And there's so many rules, and there's so many exceptions to every rules. Just understand that, nonprofits can be subject to taxation. It's called unrelated business income tax, and that gets filed on a Form 990T. But understand that that type of stuff does happen, and you have to be careful.
So would part of the reporting that nonprofits do play into this? Are there certain specific financial reports that they need to pull, submit, that would help keep those things in line from an accountant or an accounting perspective?
So there are definitely things that nonprofit organizations have to file. Every nonprofit organization has to file some level of a tax return. If a nonprofit organization or a tax exempt organization goes 3 years without filing with the IRS, they can lose their tax exempt status. So we've seen many organizations who, undergo changes in their boards of directors and stuff, and something happens, it slips through the crack, they don't file these returns, or maybe they have zero operations, but they still want to keep the organization going. They don't file returns, and all of a sudden, after 3 years, they get a letter from the IRS and saying, hey, we haven't heard from you, so therefore we're pulling your exempt status. You're no longer an exempt organization. And if they're no longer an exempt organization, now they have to file the same tax return every other corporation has to file. But the main tax return that a nonprofit organization files is a Form 990. And there are different derivatives of that Form 990. So if you generate under $50,000 worth of income as an organization, you file a 990N, which is a postcard filing. It's basically what I refer to as the Horton Here's a Who filing. It's basically, it's something you send and it says, we are here, we are here, we are here, right? For those Dr. Seuss fans. The second form you have is a 990EZ. That's for $50,000 to $200,000 and under $500,000 worth of assets. You can file a 990EZ. It's a stripped down version of the 990. And then once you get over 200,000 of revenue, or over 500,000 worth of assets, you have to do the full blown 990. And then each state is going to have its own filing requirements. Here in New York, we have the Char 500. Every state has a different filing requirement. You could have to file in multiple states depending on where you have what's called nexus. And nexus really deals with do you have a presence in that state, whether it be a physical presence, you're actively soliciting contributions within that state, that could all create nexus. So you have to register in various states, and each state's going to have its own rules. Also, here in New York State, if you generate over $250,000 worth of revenue, you're required to have an independent accountant do a review of your financial statements, and over $1 million, you're required to have an audit of your financial statements.
Okay,
so there's a lot of rules and stuff that come into play.
Sure. And that brings me to the next question, which what kind of role does it play from an important perspective, or maybe what kind of advice can you provide to nonprofits as far as the financial planning or budgeting aspect that they do for their organization to cover their bases as far as those reports and tax filings are concerned?
Well, I'm going to take it one step back, okay? I'm going to look at it from a governance perspective, which is probably more important than the tax filings. Yes, the tax filings have to get done. Yes, those reports have to get done. But ultimately, the board of directors has a fiduciary responsibility to the organization, right? They have their duty of care, duty of obedience, and duty of loyalty, the three major duties that nonprofit board members have to the organization. Part of that is, making sure that they have maintain proper fiscal oversight over the organization, safeguarding of assets, all of those things. Part of that fiscal oversight, and think about it, I'm a board member. I meet, once a month or once a quarter or whatever. You're the CEO of the organization, running the organization on a daily basis. I need to make sure that there's some level of communication that takes place. I need to make sure that we're on the same page. I need to make sure that you're spending the money appropriately and that you're prudently utilizing the resources of the organization, right? So that's where the budget comes into play. Think of the budget as a nav system, right? So I've got this navigational system. I put in the address that I want to go to and my car goes, and I start traveling down the path or down the road to get to where I need to go, right? And that budget is my path of what I want to do. It tells me what revenue is going to come in, tells me what expenditures are going to go out. All of a sudden now I deviate from that path, right? I don't spend the money the right way, enough revenue didn't come in. So all of a sudden I get this warning, hey, you've deviated from path. Here's a new route, or you got to get back on path. Well, that's kind of what the budget does. It creates the path, and then you want management to provide budget to actual reporting on a regular basis that says, here's what the budget was, here's what the actual expenditures are, and to the extent that there's a deviation, how do we get back on path, right? So if I'm overspent in one category, why? What do we need to do to fix that? Or did I just blow the budget and maybe there was a mistake? Well, if that's the case, now what do I need to do? Where am I going to make cuts in order to make that up? Do I have enough reserve levels to cover that? Am I going to bring in other revenue streams? Do I need to modify what I'm going to do from a fundraising perspective? So all of a sudden now, a bunch of new questions pop up for the board, and the board now has to start thinking about what are we going to do in conjunction with management to get us to where we need to be so we're back on track as an organization. So that budget is a super, super important tool, probably one of the most important control tools with respect to the fiscal operations of the organization. So, and I see a lot of organizations, they create an annual budget and they divide it by 12 and you got your 12 months. I'm a firm believer, don't do that. Create a monthly budget and consider what your expenditures and stuff are going to be each month and what your revenue is going to be each month. Let's say you have a fundraising event in June. Well, January, February, March, April, and May, you're going to say, oh, we didn't bring the revenue in, but we're on target because that's a timing difference. And then June comes and you didn't get all the revenue you're supposed to get in, and all of a sudden now your budget's out of whack. So it's better to kind of plan month by month so that you can actually do a good budget to actual and understand, are you truly on target?
Yeah, that's a great piece of advice. And I'd also like for you to speak to the point of I believe that you are personally a board member on at least one nonprofit board,
On
or
a
you
few,
have
yeah.
been in the, okay, on a few. So you spoke to kind of the practical implications of budgeting and keeping things on track as a board and working between board and nonprofit management. But what can you speak to with regard to the relationship aspect of that? How to keep the board helping the nonprofit, how to keep the nonprofit helping the board from a relationship perspective?
Um, that's kind of an interesting dynamic that comes into play.
For
And
sure.
I say it's an interesting dynamic because I find in a lot of organizations, there are some organizations where management is strong and the board is weak. There are some organizations where the board is strong and overpowering and they step on management. What you want is you really want a collaborative environment. You want an environment where the board and management have kind of a good open dialogue where and that dialogue has to happen at the appropriate levels. You know, again, I've seen organizations where every board member is reaching out and asking questions. Well, that kind of creates all sort of havoc within the organization. So again, you want to create channels. You want to have policies in terms of communication. You want to make sure that that communication is open communication because open communication is super important. But you also want to make sure it's at the right level.
Mm.
You should have regular communication between your board president, board chairman, and the executive director, CEO of the organization. So that should be your first primary dialogue that takes place. Another good place for connection would be your treasurer and your CFO. Okay, those are probably your two main connecting points between the board and the organization. And then the other points where connection occurs is through committees. So if there's going to be, various board committees that are established, those board committees typically would have board members, and sometimes you'll have members of the organization as part of those committees. So if I have a fundraising committee, I'm going to include my development person within the fundraising committee. If I have some level of program committee, maybe I'm including some of my program directors. So whatever those committees happen to be, if there's a staff member on that committee, that's one place where you can have that connection, but that connection should be at the committee level, not where the committee members are randomly reaching out to members of management and kind of asking them to kind of go off the rails and answer questions that are, things for their own purposes. Really, the goal is you want to create an environment where everybody's working together for the common good of the organization. One of the things I tell my clients or my board members all the time is one of the things you want to do is, take your mission, print it out on a little piece of paper, put it in front of you at the board meeting. And every time you make a decision, every time you're kind of going through a deliberation, read that again and make sure that your decisions are made in line with the mission of the organization, because everything you do should be in the furtherance of the mission.
That is such a good word. Thank you for sharing that. That's really important. I think, especially for the audience we serve is more small to mid-sized nonprofit, and so to really keep that focus on the mission is so key.
I mean,
And
I think, when you're dealing with smaller, I think part of the biggest challenges that smaller organizations have is how do I attract board members? How do I get board members, to work with my organization? It's the challenges that we hear all the time when, the two biggest challenges, we need more money and we need to expand our board, or we need board members with certain expertise that we just don't have. So how do
mm,
we kind of go and get those? So that's, with the smaller organizations. So obviously from a board perspective, how do you get board members, and how do you keep my board members engaged? I think, from how do you get board members, first of all, it's communication with other boards, it's communication with your board members. It's looking at the people you serve and the communities you serve, because the board has changed. There's been evolution over the last 5 or 10 years. It used to be that you brought board members in who could fund the organization. Okay. Now you want to bring board members in who are reflective of the organization, who
yes.
are going to be able to bring different perspectives to the table, who are going to understand and be able to govern the organization effectively. So now you want to look at who you're serving, and should I pull board members from who I'm serving or families of who I'm serving? Who the communities I'm serving? Does my board look like the communities I'm serving? And is it reflective of the communities that I'm serving? Do I have the expertise on the board that I need? I might want someone with fiscal background. I might want someone with a legal background. I might want someone with an education background if I'm a school. So I think it requires more planning now in terms of looking at your board and understanding what you want your board to look like, and that'll help you to determine who you're going to ask. It's not about who has the money anymore.
Hmm.
If you're looking at who has the money, maybe there's an advisory board or something else you can do. You really want your board now to be a little bit different than what it was in the past.
Yeah, that's good to focus on things on how they're changing in today's day and age, which is a little segue into this last question I have for you, back to an accounting perspective. As technology continues to change over time, how how would you advise a nonprofit to utilize certain technology in their accounting and in their record keeping, especially as it pertains to maybe submitting to an accountant when it comes to
Uh,
tax season?
so technology is changing. We all know that. From a technology perspective, technology is getting smarter. You've got AI that is really playing a dominant role in every conversation that takes place in every industry. And you're going to see AI become much more dominant as we continue. And there's a lot of challenges on how we're going to utilize AI effectively. What are our policies surrounding AI? Because AI brings up a lot of issues and stuff. It can open up organizations to exposure and everything else. Um, so, that is changing, that is happening, and it's finding its way into the accounting world also, as a lot of the new software applications are building AI into the software applications where they're learning. Right? I mean, most smaller organizations are using programs like QuickBooks or QuickBooks Online. They're using FundEasy, which is a program in New York that's pretty popular for nonprofit organizations. Um, and there's other software applications, but those are the ones that are primary for the smaller organizations. Um, and then depending on what type of nonprofit you are, if there's a billing component to what you do, there's usually some billing software you might use. The question is, how do they integrate? And you want to make sure that you've got software that integrates effectively. If it's not integrating effectively, can you create a patch through Excel or through some other way to get that speaking to each other? We're seeing a lot more organizations starting to use stuff like Bill.com, which is an accounts payable sort of application that allows you to more effectively review and approve invoices remotely and stuff, especially if I got a smaller organization and I need board members now to approve things or board members to sign things. That can all be done electronically through like a Bill.com. So you are starting to see more and more software. There's Expensify. There's software applications that allow you to limit credit card usage. So let's say, you're going to be running a field trip and you're going to be taking, 20 kids on a field trip, but I don't know how much money you're going to need on that field trip. I can give you basically a credit card that has a one-time use for the day, putting a limit of $250 on it and saying that it can only be used for food. So there's a lot of different things that we can do now because of technology that allows for organizations to create tighter and better controls, which at the end of the day, as an accountant, that's part of what we're looking for. Is we're looking for organizations to be able to establish controls, to be able to safeguard, as I said, part of the board's responsibility, safeguard assets and make sure that the money is being used the way it's supposed to. Because, again, at the end of the day, we're trying to raise money, bring it in, and have the biggest impact we possibly can with those funds.
Right. Absolutely. Well, Ken, I have so appreciated and enjoyed our conversation and you sharing the insights on not just accounting, but on nonprofits in general and the board specifically. How can our listeners get in touch with you if they'd like to learn more?
If anybody wants, I'm more than happy to answer any questions anybody has. You can reach me by email. It's kcerini@cerinicpa.com, and Cerini is spelled Cerini. So it's kcerini@cerinicpa.com, or my office number is 631-582-1600, and my extension is 203. So more than
Wonderful.
happy to answer any questions. By the way, this was super fun. I'm used to being on the other end of the microphone, so this was a lot of fun being on this side. So this is really great.
Right.
Thank you.
Well, so glad to have you. And again, if you would like to get in touch with Ken, we'll have all of that information in our show notes for the episode. Please be sure to subscribe to Beyond the Donation podcast wherever you listen to podcasts, and you'll be notified of new episodes as they are published. Leave us a review and or 5-star rating while you're at it, and we will catch you next time. Thanks again for coming, Ken.
Thanks a lot, Val. This was great, and you get 5 stars from me.